Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 8th of June. Starting off with the FTSE 100, and we've got a bit of a barrier here around the old April support, 76.30. That's roughly been the peak for the market over the last couple of weeks, and below that, if we don't get an end of the close above that, we've got the risk of 74.80 or 90, which is the floor of that rising trend channel from the end of last summer. Good points here, I suppose, are the way that we were holding above the 200-day moving average around 75.25. But the negative, the way that the RSI is still below neutral 50, we want it to be well above the 45 area. 55 would be rather better. If we do break through 76.30, then the 50-day line, 77.20, would be the obvious destination. That's still rising, so that is a positive for the market. On to the DAX. The picture here also pretty stagnant. The DAX in a better place though, because we were holding above the floor of the gap from last week, around 15,800. Above that, we're looking for a clearance of 16,000 and eventually a push to the top of the rising trends channel from back in September, and hopefully hitting 17,000 by the end of next month. On the downside, 15,700 recent support, 10 of the month support, the maximum that we're looking for on the downside. And RSI still bumping above the neutral 50 level, which is also a positive at the moment. On to the Dow, and here the situation is that we have been hoping that for the big breakout through the old April resistance line there from last year. That's now just shy of 34,000. With a sharply rising 50-day moving average, which is very encouraging, although the 200-day line is rather mysteriously going down. RSI at 56, so right in the box seat for a break to the upside. That could that suggests that this is a bull flag resting on the 50-day line, and that we will get that break to the upside. Initially, we could see a move to the line that I'm just drawing now, so that's around 34,700, and that might sound more realistic than the top of that rising trend channel from August at 37,000, which I suppose, even if everything went well, would have to wait until the end of the summer. Downside at the moment seen at the 200-day line at the most, 32,700. On to Bitcoin, where the authorities are trying to prevent the recent rally having further legs. Obviously, the peak there around 31,000, just under half the all-time peak around 68,000. So the glass, in theory, is still half empty rather than half full. But market making a good job of resisting these negative fundamentals. 25,000, the old August to February resistance, and that's come in as new support. In fact, most of the time we're even holding above the old March support there at 26,700, although not at the moment. Slightly concerning that we've had another RSI peak at the 50 level, so that does and can be an indicator to the downside. If we break 25,000, then the floor of that rising trend channel from last summer, and the 200-day line at 23,400 could be on the cards, but we're not expecting lower than that. On to the stocks, and not as many sort of flashy situations as we would like, perhaps. First one is Ananda, which looks as though it's resuming its recovery from back down at 0.27 that we had in March. So it's done very well indeed, 0.67 at the moment. And above the 50-day moving average, sharply rising 50-day line, we're looking for the shares to hit a penny as soon as the end of next month, perhaps even sooner. But that sharply rising 50-day line and waiting for the 200-day line to rise as well could sort of accelerate the recent recovery, or the latest recovery this week. There's a resistance line broken there around 0.62, so that's why we're looking for the 0.6 area to come in as remain as support, and then take this market up to a penny by the end of July. Onto a stock which had a little flurry early in the week, and so I think it's just worth reporting that Ajax managed to close above its 50-day moving average at 8.25 pence for the first time since the beginning of March, which is normally a good thing. We've got a rising 200-day line as well, so that should provide further momentum, and obviously we've come off very oversold RSI numbers around the 4 out of 100 level, so certainly some gas in the tank there if we do make progress above the 50-day line. 13 pence by the end of next month, the favoured destination at the moment, especially while we hold above the 8 pence region. On to Brandshield, where there was some high-flying director buying, or actually investor buying. I think Sir Terry Lee here in the mix there as well, of Tesco fame. Current situation is that we've broken the initial target here around 7.5. Above 7.5, we're looking for 12 pence as soon as the end of next month. Unfilled gap to the upside on that latest jump towards 7.25 pence, and sideways consolidation as well. So that's step fashion, one of the strongest patterns that you see in charting. We had another step progression there back in April, May as well, off the low. So looking quite encouraging there for Brandshield after a long time getting its act together. Another stock that I know a lot of punters are interested in is Coro. High hopes here. Here we've broken a line of resistance there from November, and even if you suggest that that line is actually there, we're still looking very healthy indeed. We've broken through the 50-day moving average with a gap, I think an unfilled gap to the upside. Yes, you can see that. So that is a decent positive for the stock. And anything above 0.22, initial target 0.24, above that, we're looking for as high as 0.34 by the end of next month. So end of day close above 0.22, 0.24 and 0.34, the levels there. On the downside, we would hope that there'll be no price action below the floor of the gap at 0.18. On to a stock which doesn't normally make the grade in the bulletin board heroes, but First Group, I think great dividend news there. And if you look back at the chart, you can see that this could be the great breakout for the stock. The top of that rising trend channel from 2018, pointing to nearly £1.90, and we could see that maybe over the next couple of months, especially while we hold above the recent resistance. Well, ideally above 138, but I suppose more realistically above the 130 level, looking for 190 on First Group. And obviously there's been an unfilled gap to the upside today, so ideally the shares will build on that. Probably what the stock with one of the shortest charting histories at the moment is Golden Metal, but we have broken a line of resistance from the beginning of May around the 7.5 pence level. It's now 8 pence, so it's had a good response to this week's news. An unfilled gap to the upside, so bear trap gap reversal at the turn of the week as well. So that is encouraging, does suggest that we're going to break the initial highs there around 8.8 pence and then hopefully move on higher for that. So definitely worth watching to see whether the shares can break the initial high, trading high they had. Next stock is one that has been requested, and again, not something that normally appears here, but Gemfields, rising trend channel there on the daily chart from the beginning of 2020. It looks as though we've hit the bottom of that channel around 15 pence, and above 15 pence, looking for up to 24 pence by the end of, well, probably the next 1 to 2 months is probably the end of July or onwards, really, for that. If you're cautious, you wait for a break of the 50 and 200-day moving average area around 17 pence before assuming a big breakout is on its way. Obviously, we've been consolidating for so long, a couple of years, then one would expect when the logjam breaks above 20 pence, there could be a decent move. Best case scenario is probably the resistance line I'm about to draw now into the upper 20s by the end of the summer, so by the end of August, something like that. But let's see if Gemfields can start speeding up in terms of its price action. Another stock which maybe needs to speed up a bit is Jubilee Metals. Here we've had bear trap double bottom for the share, so end of May, June support for the stock, just breaking that March low there, which was around 7.6 pence. A bear trap gap reversal and a gap through the 50-day moving average as well, which suggests that finally we could get up towards double figures, maybe fill that gap from February up to 11.5 pence. Something like that by the end of next month, but obviously that's assuming the shares are ready to bounce. But it is very consoling that there has been an unfilled gap to the upside, and after a bear trap, bullish divergence as well, that also hints that the shares are finally ready to turn. Speaking of turning, we've got Rainbow Rare Earths, which looks as though after effectively a double bear trap rebound from below 8.25 pence, the April support, the shares are on their way. 50-day moving average starting to curl up as well, which is positive, and we've got a nice bullish divergence line there, so that does suggest 13 pence, 14 pence could be seen by the end of next month. Moving along to the last few. First one is Sabien, where I was impressed by their CO2 mitigation news. Here we've had a bounce off a rising 50-day moving average. Looks like the 200-day line starting to rise as well, which means that we should be on track for a retest of the 18 pence resistance area of April as soon as the end of next month, perhaps even sooner if we are lucky, just about to break that resistance line there from April. And that is also quite encouraging. RSI is also pushed back above the neutral 50 level. So let's see if probably 18 pence regarded now as the minimum there for Sabien. On to strategic minerals, which I covered, I think, yesterday, but I can't remember that far back, unfortunately. Here we've got what is now an island reversal, bear trap island reversal. So we gapped down in April, gapped up today through the 50-day moving average, and we're looking for as much as 0.38 by the end of next month. Obviously, if that happens, I would be very chuffed indeed, but let's see if we can actually get that particular area, or get the shares at least rallying into the 20s properly over the next few weeks. Star of the show over the last month has been Versarien. We had the trend line break at 1.3 pence back in May, and the shares have tripled effectively. We were looking for as high as, well, first we had a target at 2 pence, then 4 pence, and then up to 7 pence. I think the high yesterday, 6.66. But hopefully we'll get up to the 7 pence area, which was basically the support on the way down back in January and February. So that's probably the last target we're looking for at the moment. If you're a real fan of the shares, you'd probably be looking for the 200-day moving average at 9.5 pence, but that might be pushing it. Upside valid while we're above 4 pence, the previous target. On to a couple of less high-profile stocks, but worth covering, I think. First is Vianet. And here we've got a broadening triangle there, a couple of unfilled gaps to the upside, so it looks like the shares mean business. We should see £1 for the stock by the end of next month, or perhaps even sooner, while we're above 80 pence. So keep an eye on that one. And then finishing off with Velocity Composites, which has been a very steady market over the last few weeks, sharply rising 50 and 200-day lines, and that means that we should be justified in looking for a target near 80 pence. Top of that October rising trend channel by the end of next month. Upside value while we hold above recent support at 48 pence. That's it from me today. More updates tomorrow.